pundit predicts what will happen to XRP and XLM once Clarity Act passes. And that's coming from our news source, Times tabloid. For years, the mainstream media has tried to paint a picture of a brutal war. Traditional banks on one side and utility-focused digital assets like XRP and XLM on the other. They want us to believe that one system must completely destroy the other to survive. But a fascinating new perspective has just gone viral on X, posted by the prominent crypto pundit X Finance Bull. This post completely flips the script on what the futures look like once the highly anticipated Clarity Act finally passes through Congress. Instead of a total replacement of the banking system, we are looking at something far more practical. An integrated, parallel financial structure where traditional community banks don't lose their footing, but instead gain superpowers. So let's unwrap exactly what this means for the assets we watch every single day. But before we continue, let's check XRP's daily chart time frame. And as we can see, the current market price is playing at 1.1083. As for my analysis, based on our daily chart time frame right here, XRP will continue to consolidate between this major resistance at 1.2234 and minor support at 1.0897 this coming few days. But we still need to watch this minor support because the momentum is still on the bearish side. So if this 1.0897 support got broken, then we might expect a continued downtrend way down to our major support right here at $1 or 1.0169 dollar. All right, let's go back to our news and let's talk about why X Finance Bull right here arguing that banks won't lose their deposits. All right, the core of the argument shared by X Finance Bull centers around the survival of community banks. For a long time, traditional banking stakeholders have been terrified that if digital assets become fully integrated into the legal framework, everyday citizens will pull all their cash out of local bank accounts and move it entirely into digital infrastructure. The pundit strongly rejects this fear. According to the post, passing the Clarity Act will not cause a mass exodus of deposits. Instead, it will allow local community banks to seamlessly add digital asset capabilities right alongside their standard checkings and savings account. They will keep doing what they do best, holding core deposits, while expanding their services to exclude tokenized payments, rapid settlement systems, and secure digital custody. Now, in my opinion, this makes complete logical sense to me. The average consumer isn't looking to become their own IT security manager overnight. People value the familiarity and institutional safety net of a local bank. By integrating assets like XRP and XLM directly into the local banking menu, it removes the friction of moving back and forth between traditional cash and digital platforms. It legitimizes the space. Instead of fighting the banking system, utility tokens are being positioned to upgrade it from the inside out. All right? Now, what does Senator Cynthia Lummis say about banking stability and digital upgrades? To back up this perspective, X Finance Bull's post highlighted some critical remarks from U.S. Senator Cynthia Lummis. In a recent video discussion, she directly addressed the anxiety of local banking leaders who are worried about losing their deposit bases to the digital economy. Senator Lummis stated clearly that the actual data simply does not support the idea that digital asset growth destroys traditional banks. In fact, she pointed out that as regulated stablecoins and digital financial products have expanded over the last couple of years, bank deposits have actually increased in tandem in multiple sectors. She views the relationship between our current banking setup and digital asset infrastructure as an environment of peaceful coexistence, not hostile displacement. So, in my opinion, I think Senator Lummis is hitting the nail on the head here. If you look at how the broader economy operates, efficiency always breeds more volume. When local banks gain the ability to offer faster cross-border payments using bridge assets like XRP or handle micropayments and tokenize real-world assets via XLM, they become more competitive against massive multinational mega banks. This turns digital integration into a survival kit for smaller, local financial institutions rather than a threat to their existence. Right? Now, how do diverging user expectations shape the future of decentralized finance? Of course, not everyone in the financial community wants to see digital asset cozy up to traditional banks. The viral post highlighted a clear split in user sentiment, specifically pointing to a reaction from an ex-user named RoyNow122. Right? This user expressed a very strong preference for skipping banks entirely, stating that they would rather rely solely on private digital wallets and fully decentralized ecosystems if given the clear legal choice. This represents a major segment of the market that prioritizes absolute self-custody and decentralized access over any form of institutional integration. So in my opinion, I completely understand where users like RayNow122 are coming from. The original dream of blockchain was totally financial independence. However, as a pragmatic market observer, I believe we have to look at how mass global adoption actually occurs. True mass adoption doesn't happen by forcing 8 billion people to manage their own private ledger keys. It happens by providing options. Having a decentralized layer for self-custody existing in parallel with a highly regulated bank-integrated layer is the ultimate win-win scenario for the liquidity of both XRP and XLM. Alright? Now, what is the long-term outlook for the parallel integration of XRP and XLM? When you piece together the entire commentary from X Finance Bull, the grand finale is clear. The post-clarity act world is an environment of parallel evolution. Traditional banking infrastructure isn't going away. It is adapting. Under this impending regulatory framework, assets like XRP and XLM are being recognized as functional back-end plumbing for the movement of global value. They are tools for tokenized liquidity, cross-border remittances, and instant settlement. Banks will use them to settle balances across borders in a blink of an eye, while keeping their consumer-facing deposit structures exactly as they are today. So in my opinion, my ultimate takeaway from this update is that utility is king. For a long time, people wondered if XRP and XLM were trying to be alternative forms of everyday spending money. This analysis proves they are something much more valuable: institutional infrastructure. Once the legal boundaries are officially set by the Clarity Act, the true utility of these networks can scale without the baggage of regulatory doubt, creating a reliable, modern financial ecosystem. Right? Overall, the perspective shared by ex-finance bull highlights a crucial lesson for everyone participating in the digital economy. The future of finance isn't a zero-sum game where one system must die for the other to live. The passing of the Clarity Act is set to pave the way for a coexisting financial model. Community banks will likely secure their traditional foundations while evolving to offer modern tokenized capabilities. By embedding utility assets like XRP and XLM into regulated systems, the entire network gains massive, sustained volume. It is an evolution of infrastructure, not a disruption of stability. As always, keep your eyes on the shifting landscape, pay attention to the real data, and stay grounded. And this finally ends our video. Thank you very much for watching, and see you on the next one. Or you might just as well check this recommended video right here.